Good afternoon. My name is Campbell McCrary. I'm a Vice President, Capital Markets at Amvest Capital in New York. Welcome to the Amvest Capital Live webinar with PureGold Mining Inc. PureGold trades on the TSX Venture as PGM, Papa Golf Mike, and on the OTC is LRTNF, Lima Rio Tango Nevada Foxtrot. Hope you'll enjoy today's program. We'll also be available in replay mode. Feel free to chat in your questions in the question pane of the GoToWebinar control panel, or simply email them in. Try and ask the questions in real time or after the webinar. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Very important, our disclaimer, among other things, but most importantly, this call is for informational purposes only. We have presenting with us today Darren Lebrenz, the President, CEO, and Director of PureGold. Darren is a registered professional geologist with over 30 years of experience in the mineral exploration industry. Most recently, Vice President, Business Development for Terrain Metals, which was acquired by Thompson Creek in 2010. Prior to that, he was at the Placer Dome Group, where he was responsible for design and supervision of exploration programs, management of geological activities at both underground and open pit mining operations, as well as technical support and geological management of several feasibility studies and economic valuations. Quite significantly, in the Red Lake camp, he was the former chief geologist at the Campbell mine. He will be telling you a bit more about that. So Darren, if you can turn on your webcam and share your screen, we'll jump right in. Good.
Thanks, Campbell. And
yep.
Yeah, I'm Darren Lebrenz, as you introduced, President and CEO of PureGold Mining, and I'd like to thank you for taking the time to listen to the introduction of PureGold. We are focused on the Red Lake area. You can see in front of you right now a stylized map or screen showing the flag of Canada depicted in maple leaves, and this is quite deliberate. It's a real call to our location. So our project is located in Red Lake, Ontario. We are constructing today the PureGold gold mine, and it will be the next gold mine to be completed and brought online in Canada. In fact, in all of North America. In production, will be the 5th highest grade mine in Canada and the 17th highest grade mine in the world, which puts us in about the 95th percentile worldwide. So, clearly a very high grade gold mine that we're constructing today in Red Lake, Ontario. Importantly, the deposit itself is about 2.1 million ounces indicated at 9 grams per ton. Another 500,000 ounces inferred at about 8 grams per ton. And out of that, we've pulled out 1 million ounce reserves at 9 grams per ton. So it's the first 1 million ounces of gold that will start pouring around Christmas time this year, only months away from that first production and cash flow. But that really speaks to the growth that we see in the project. This does come from a broader mineral resource. We've got discoveries that lie outside the footprint of that phase 1 mine, if you will. And we're already thinking about, how we would mine those, when we'll bring them on stream and what that could do to the future production profile of the PureGold mine. And so, those really tie together a lot of themes that I'm going to weave through this presentation. Of course, we're going to talk about location and jurisdiction. We'll touch on grade and the impact that has, particularly in the rising gold market. Size, this is clearly a big system that we have in place here, and I'll talk about that, and ultimately I'll talk about growth and where to next as you round the corner and complete construction on our phase 1 mine. And so maybe with that introduction, Campbell, we can shift back to you, and I've got a bit of a video here that I'm going to highlight, and you guys are going to be kind of the sneak peek preview. We haven't really shown this video as yet, and it will give you a sense of both the location and the size of the asset that we have in place here, and really a bit of the dream in terms of where we see growth coming.
Okay, here we go.
In this very place, more than 2.5 billion years ago, before life itself existed. Intense heat and pressure from the Earth's mantle caused massive tectonic upheaval. Rivers of fluids and gases flowed upwards, depositing gold where the Earth's crust had cracked and collided, creating one of the richest gold deposits in the entire world. More than 30 million ounces of high-grade gold have already been produced in the Red Lake Gold District, including 2.5 million ounces right here at the original PureGold mine. Data from more than 1 million meters of drilling has now delineated this new 7-kilometer-long gold corridor. A corridor with the same rocks, same structure, same geology, and same high-grade gold as the famous Campbell and Red Lake mines located right next door. Since 2015, PureGold has discovered more than 2 million new ounces of high-grade gold in this corridor. The first 1 million ounces will start pouring in 2020. I believe this is barely the tip of the iceberg. We continue to discover new high-grade gold all along this corridor, at surface and up to 2 kilometers underground. In less than 5 years, we've defined over 2 million ounces of new gold, and we've only scratched the surface. I believe that this is just the beginning, that significantly more high-grade gold is waiting to be discovered, right here in Canada's Red Lake. We are PureGold.
Yeah, so I hope that gives you a bit of a sense of you know, the location. You can see the highway running through the property package. Obviously, get a sense of some of the infrastructure we have on site there with a head frames sitting on top of the deposit and on top of a kilometer-deep shaft. And you can see the mill on site there, and you get a sense of some of the countryside and the size of the system as it played out in the video there. You also saw Mark O'Day's vision. He talked a little bit about, you know, his beliefs in terms of the scale and size and growth aspects of the project. And I do want to just mention that Mark was to join me here, but something came up last minute, so he was unable to make it. So I apologize for that.
You wanted to share your presentation, Darren?
Yeah, we'll do that now.
Yeah.
And are you seeing it?
Here, I'm going to try a little thing here. Hold on.
Okay.
Okay, I'm going to cue you again. Here we go.
Is it clear now?
No, it's not. It's waiting. Are you saying show my screen?
I am.
Okay. Let's try one more thing. Showing my screen. Now I'm going to show Darren's screen.
We can always get Campbell to share it from the website.
Yeah, I'm going to give Adrian presenter here. Bear with us. Thank you very much. Okay, Adrian's got it up.
Hey, can you see it there?
Yep, just put it on view full screen and follow along. Thank you.
All right. Apologize for the bit of the technical glitch there, but we're off and running. So, you know, again, with respect to location, obviously we're located in Red Lake, Ontario, Canada. This is an area with, you know, Canada's been built upon mining, and Red Lake itself has got a, you know, very long mining history. You know, when you speak to Red Lake itself, there's been continuous production in the Red Lake area for about 100 years. It is one of the highest grade gold camps in North America, with 30 million ounces of gold to date. You know, another, I guess, aspect of jurisdiction is the geological jurisdiction endowment, and that really is reflected in that 30 million ounces of production. And we certainly think on our own project that we've only just scratched the surface. The last aspect to jurisdiction to talk about is really the gold price. And so obviously we're in a very constructive market for gold today. We've seen a real appreciation over the course of the last year. But when you think about it in Canadian dollar terms, it's even more pronounced. Last time gold was at $1,900 an ounce in 2011. We had a Canadian dollar that's pretty much on par with the US dollar. And so we saw a similar $1,900 ounce gold price in Canadian dollar terms. Today, we've had a bit of a disconnect here, and Canadian dollar trades, you know, by about $1.33 Canadian for a US dollar. And what that means is the gold price today is fluctuating between $2,600 and $2,700 Canadian, which when you consider that all of our costs are in Canadian dollars, it really has led to incredible margin expansion on our project. So maybe Adrian, next slide. And can you just go to view full screen on that?
Let's see here.
Full screen mode, yeah.
There we go. Yeah, it's better.
Yeah, so I will be making forward-looking statements, and I just want to caution you on that. Please do go to our website, www.puregoldmining.ca, for further information. So you get here on the next slide a real sense of the nuts and bolts of the project, the reality of it. This is our existing processing plant. It's you know, it's a tangible asset that we had when we started construction on the project. And effectively, when you look at our mine, which is really now in full stage development, there are significant improvements made in this mill. You know, we're putting in a new grinding circuit. We've got a new gravity circuit going in. We have a new gold room that'll go in, and all this is driven towards you know, maximizing the mill availability and maximizing the throughput in that modernization of the mill. So, you know, a real tangible asset here that has allowed us to build out our mine for about $100 million, which is, you know, a very low capital cost in terms of a new gold mine operation. Next slide. So I do want to touch on the team. You know, myself, as introduced, I was chief geologist for the Campbell mine, which is part of the Red Lake mine complex in the mid-1990s, and that really is a, you know, a theme that resonates among the collective group, is that deep Red Lake experience. Co-founder Marco Day really had his career kick-started in the Red Lake camp, and you go beyond that. Rob Peace was general manager of exploration for Canada for Placer Dome, responsible for Red Lake. Maurice Belanger on our board was VP Technical Services for Goldcorp, responsible for Red Lake, and then on the executive management team on the geology side, Phil Smirchansky and Chris Lee both have deep experience in the Red Lake camp, and this really is, I think, a key to the success that we've had thus far in building out a new resource, building out a reserves, and moving now into production. But we're also proven mine operators, and you can see on the right side that we've fully fleshed out the mine operational team. So that management team is in place. We're about 125 employees thus far, and when you look at the next slide, to show you some of that breadth of experience in terms of the number of mines that we've operated on around the world. So you can see there's 68 mines that our team have played a key role in operating across the planet, and that really does speak to the experience that we've built up on site and within the board of management group. Next slide will show it graphically, and you get a sense of that experience again in a graphical representation with 64 deposits that we found. We've got 33 mines that we built and 68 mines that we've operated. So we really think that you know, we've got a real strong operating experience in the Red Lake area that's understand the geology, we understand how to build mines, and clearly we know how to operate mines, and that experience comes through real strong here. So what we're looking at here again reflects back on the jurisdiction. This is Red Lake, Ontario. It is a mining community, as I said at the outset. There's been about 100 years of continuous mining in the Red Lake camp. In the background, you can see a landmark that really dots the landscape across Red Lake, a couple of head frames and a mill, and that reflects the the PureGold area, the Red Lake mine. It is a mining community. We have paved highways, grid power that we follow this 20 kilometers down the road, and we're rated our mine grade. I think another aspect to touch on when you look at that mine that we're staring at here, the Red Lake mine, that started operation 75 years ago. It's been mining continuously, and it starts at surface and has very deep roots. They're currently mining at a depth of about 2.5 kilometers below surface, and that is a characteristic that's quite common to deposits of this class, and certainly we'll touch on that when we shift across to the PureGold mine. So next slide. What we're looking at here is a simplified geological map. I'm not going to go into any details on this, but I do want to highlight two criteria that I think are really define the Red Lake mining district. One, the green that you see here, that's the bomber assemblage. It's the right rocks. When you look at the 30 million ounces of gold that's been produced in the Red Lake camp to date, more than 95% of that comes from the bomber assemblage of those green rocks. So you want to be within those rocks. You also want to be near the contact between the green and yellow. We've highlighted two areas here with a red dashed line that identifies those two characteristics within the green and close to the contact. And the reason for that is that contact is it's a deep fault line. It really is the plumbing system for deposits, and so it forms the roots of those deposits, and then they hit the right rock and mines are formed. So there's two trends that are identified here. The northern one, the one to the top of the screen, is owned by Evolution Mining. They just bought it from Newmont after Newmont acquired Goldcorp. They paid about $700 million all in for that asset. And then on the south trend, you see our own PureGold trend, which we own 100%. So we really feel like we have some of the most fertile geology within the Red Lake camp. On the next slide, we'll look at the same thing from an angle. It's a cutaway diagram showing on the right, again, the Red Lake mine, and on the left, the PureGold mine. And so there's a few things to highlight on the screen here. One is scale. And so you can see a similar scale. They have similar lengths between the Red Lake mine on the right, which has produced 25 million ounces, and our own PureGold mine on the left. They both start at surface and they plunge downwards. One of the key differences is on the right-hand side, again, the Red Lake mine is mining at a depth of 2.5 kilometers. On our PureGold mine, our resources and reserves are defined in the top kilometer. And so we really feel that we're about half done. In fact, if you were to strip away 35 years of mining on the right-hand side, you would look exactly like our own PureGold footprint. On the deepest part of the Red Lake mine, it's a skinny kind of appendage that runs down to the bottom of that deposit. That's known as the high-grade zone. And the high-grade zone was discovered in kind of the late 1990s, and it really was transformational. It took Goldcorp, which operated that part of the deposit, from a 50,000 ounce per year producer in the late 1990s at about 8 grams per ton to a 500,000 plus producer with a grade of 77 grams per ton. It truly was transformational, explosive discovery that was the springboard for Goldcorp to ultimately grow into the largest producer in the world and have a market capitalization in the tens of billions of dollars. Shifting across to the PureGold mine, at the base of what's highlighted there is the Madsen shaft. We have the 8 zone. And the 8 zone is our own high-grade zone. It sits in a similar geological environment to the Red Lake high-grade zone. It runs about 3 to 4 times higher grade than our overall reserves. First part of our mine plan, and we're quite excited about getting down there and realizing the benefit of that high grade from a mining perspective. But importantly, it is completely open. And so we'll show in the coming slides here the opportunity for expansion and continued transformational discovery within the PureGold mine. One last aspect on here is you can see the dot there that shows 14.3 grams per ton over 2 meters. This deep anchor point intersects the deposit at about 2 kilometers below surface. And so that gives us a real high degree of confidence of the potential of our mine to continue to persist to depth, much like the Red Lake mine. And really that is an opportunity for us to show continued growth far beyond what we've outlined in our current resources and reserves. So next slide. We've taken very much a scalable approach to the development of our asset, and really we're building this out in phases. Our phase 1 mine is 1 million ounce reserves that will start pouring before Christmas this year, and that's shown with the dark red color on this plan map. And so what we've done here is we've taken all the resources and reserves and we've projected them to surface. The dark red is our phase 1 mine. The lighter red colors, they're shown as Fork, Wedge, and Russet South zones. Those are new discoveries where we've already defined resources, but they were not considered as part of the feasibility study, and really they form the nucleus of our phase 2, if you will. So you get a sense here of the scale of the asset. From the bottom left of Wedge to the top right, we're looking about 7 kilometers. So this is a 7 kilometer long mineral system that's defined by resources and reserves. We can also talk about grade. You know, Wedge, Fork, and Russet South, we've got drill callouts there, and each in their own right have very high grade results that define those zones. The 8th zone is highlighted here with some of the callouts there showing the truly spectacular nature of the grades that we see there. 4.3 meters at 466 grams per ton, 5.5 meters at 342 grams per ton gold. And these include subintervals that run into the kilograms per ton. So truly it is a different animal. It's very high grade and really something that's quite exciting from a mining and discovery perspective. One last comment from this slide is, you know, our resources and reserves are defined by 1.3 million meters of drilling. So just let you think about that for a moment. It's truly an incredible amount of drilling that's gone into defining the resources and reserves. In fact, when you sit within that phase 1 mine, within that red area, and you look at our reserves, the average spacing between drill holes is 6.5 meters or about 20 feet. So in other words, when you're underground, you're never more than 20 feet away from a drill hole that defines the deposit. And that density, which ultimately defines the geological model and the resource estimate and the reserves estimates, that density of information gives you a lot of confidence in the underlying grade, the geometry, and the continuity of mineralization, and really reduces the risk on startup because of that information that informs those estimates. So to give you a sense of what it looks like on the next slide, we're going to draw a long section from the bottom left to the top right. And what we've done here is we've taken that mineralized structure and we show every intercept that runs through that plane, and they're color coded by grade. And so you can see that every one of those pink or magenta dots is 10 grams per ton or higher. And so you get a sense of how robust this system is. In fact, there's over 13,000 intercepts there that run better than 10 grams per ton. The nucleus of the phase 1 mine is shown in the center of the screen. And so that's that big blob of mineralization that plunges off down to the right. And again, you can see the deep hole, 14.3 grams per ton over 2 meters. And so between the base of our resources and reserves at about a kilometer below surface and that hole, there's a 1 kilometer gap of white space that really just lacks drilling. And that's an area where we see a real strong potential to continue to develop future resources and reserves with drilling from underground. Stepping to the left, you have the 8th zone, again, our high grade zone. You can see some of the high grade callouts there again. And again, you see the fact that, you know, below the 8th zone, there's no drilling. It is completely open. Bear in mind, the high grade zone of the Red Lake mine starts at about that same depth and continues down to 2.5 kilometers. It's also open up plunge. In fact, if you follow that back up to surface, you hit our Russet South zone where we've defined surface resources. Last year, we drilled a couple holes midway into what we call the gap between the Russet South zone and the 8th zone at depth, and we had success in intersecting the structure, the same blue-gray quartz veins hosting visible gold with broad intervals of lower grade and smaller ore grade intervals within that. So we're really quite excited about expanding the 8th zone, not only to depth, but also trying to follow it back up towards surface. Moving further left, you have the Fork zone, the Wedge zone. These are our near surface discoveries. They form part of our resources today. We've drilled them from surface down to 300 to 500 meter depth. They're not part of our phase 1 mine plan, but they're a real opportunity for future expansion. So if you just flip to the next slide, you get a sense of how we see this kind of playing out over the years with further exploration work. The main part of the deposit, again, plunging off to the right down to that deeper drill hole and beyond. The 8th zone itself, we'll look to follow it out to depth. And then the Fork and Wedge, we have a reversed geometry. They plunge to the left, and that's really a geometric relationship between that structure that hosts gold and the underlying rocks. So you get a sense of it all put together here. The scale, 10 kilometers of strike length here for defining additional resources and expansion opportunities. I mean, this is a big mineral system. We've got, 2.5 million ounces of resources sitting in the frame here. In a parallel structure in the background, we have 2.5 million ounces of historical production. And so that all sits within that top kilometer. And we certainly have evidence that it will continue to depth, borne out by some of the deeper drilling on the property. All right, so next slide. To that end, we're really already thinking about how we move towards phase 2. And so we've got a very aggressive exploration program that's underway here with 2 surface rigs currently drilling in the wedge zone, looking to grow those high-grade discoveries with potential to form part of an expanded mine plan. We're also drilling underground, looking to extend the mining shapes that form the early part of our mine plan to make new discoveries underground and ultimately to convert resources and reserves. And then later this fall, we'll start testing that gap zone, looking to expand and build out a real transformational discovery within that high-grade environment. So we're really in the perfect spot right now with production just months away, cash flows, towards Christmas time, but we're also aggressively drilling to grow resources to form part of an expanded mine plan or second phase of mining, if you will. So it'll be a fairly newsworthy period over the coming months and into next year. Next slide. And so I'm going to talk a little bit about the numbers here, but before I do that, I want to give you a sense of some of the activities that are happening on the ground today. So I talked a little bit about the team at the outset, and I'm really excited about that, how that's come together. We've got a full complement of miners through all the supervisory staff and maintenance driving our underground development, which really started 2 years ago with our test mining program underground. In that test mining program, we went into 2 stoping areas, and we wanted to get a sense of how our model reconciles back. How does it compare to the estimates that we made? And it compared beautifully. We're spot on tons. We actually achieved about 15% higher grade in actual mining from those areas, and that really did confirm the geological models. It confirmed the resource estimates that we had built in that area. And so we're quite happy with the results of that test mining program. Subsequently, we've continued to develop out the mine as part of that test mining program. We're opening up the deposit, and our underground development rates have been far better than our feasibility study had planned. In other words, we're driving faster, we're opening up the mine quicker, and ultimately that translates into lower costs of development, but also allows us to get to things like the 8 zone quicker. And so where you look at the feasibility mine plan, we're reaching that in about the end of year 4. We now think we'll be there in year 3. And in fact, a year out from now, we'll be underground drilling off the 8 zone from underground, looking to grow that high-grade discovery. On surface, you saw in the video we showed some of the surface infrastructure in place there. We certainly benefit from that existing capital or sunk capital, but we're doing significant improvements in the mill, and that work is well underway and on track for first gold to the mill in December and first gold pour before Christmas. So when you look at the phase 1 mine plan, you can see some of the numbers on here. These are based on sub $1,900 an ounce. So at that, you're looking at about $2.5 billion in revenue, free cash flow of about $1.3 billion. Our all-in sustaining costs are $787 an ounce, which is lower quartile of the industry, and it really is driven by grade. The unit cost is low because of the high-grade nature of our deposit. Again, at 9 grams per ton, we're the 5th highest grade mine in Canada, the 17th highest grade mine in the world, and so with the market that we're seeing right now, it's really driving down to margin. Today we're looking at $1,100 an ounce in margin, or about $1,500 to $1,600 an ounce margin in Canadian dollar terms. And so we will be delivering strong cash flow right out of the gate that allows us to pursue that phase 2 mine. Next slide. So we really do think we're just scratching the surface. That's borne out in kind of the phased approach that we've taken to this. We've made new discoveries right at surface, and clearly we have potential across that mineralized corridor for continued expansion to depth. The opportunity for transformational discovery too is readily apparent with the high-grade 8 zone. And when you go to the next slide, you'll see some of our key investors, and that's certainly the vision that we share with them. Rob McEwen was the lead investor when we acquired this asset. He's the former CEO of Goldcorp. He was the one that drove that high-grade discovery and certainly recognized the opportunity that it provides. Eric Sprott has put $30 million into PureGold. He invested $20 million to help us construct our phase 1 mine, and recently came in with a $10 million investment to drive that aggressive growth program. You know, his words, he sees similarities to this and some of those transformational discoveries at the Red Lake mine and Kirkland Lake that I described earlier, and really wanted to drive towards that with an investment in exploration. We also have the validation of 2 senior producers. AngloGold Ashanti is a 16% shareholder. They recently exercised warrants to increase their ownership and have been a very supportive partner right from day one of our acquisition of this project. And then the #1 gold producer in the world, Newmont, holds you know, about 5%. And so collectively, this group holds 35% of PureGold. Next slide. So just as a final slide, just to touch on some of the opportunities and initiatives, we're clearly focused on executing on the phase 1 mine and bringing it on stream on plan. But we're already thinking about opportunities. Certainly from the exploration side, I've touched on the surface discoveries. We've talked about the potential to expand the plant. We also have about 250,000 ounces in inferred resources within that phase 1 mine that we're testing with underground drilling, looking to convert those across into indicated resources and ultimately into reserves. But on the mining side, there's also opportunities we're looking at there. You know, clearly the feasibility study was done at $1,275 an ounce. It implied a certain cutoff, an economic cutoff grade. With today's metal prices close to $2,000 an ounce, there are opportunities there to look at a different cutoff grade, which will drive increases in resource reserves and ultimately lend themselves quite well to an expanded mine plan. And so that's certainly something that we're continuing to study. So last slide. You know, again, I want to thank you for your time here as an introduction to PureGold mining and our PureGold mine in Red Lake, Ontario. We're very excited about the stage of development we're in right now, sitting on the cusp of production with a very active exploration program looking to drive resource growth, driving towards our phase 2 mine. And we really think we're just getting started here with our project, and look forward to sharing developments along the way as we approach December and first gold pour.
Excellent. Thank you very much. Can you hear me?
Yes.
Okay. I have a bunch of questions that have come in, and again, if anyone has some questions, please send them in through the question pane of GoToWebinar. And Darren, I would share your screen again, because you might want to be flipping through, or Adrian, if you want to flip through the different slides, that would be helpful. Yeah, there we go. Some of them you've covered, but anyway, it's nice to isolate some of these kind of common questions. How soon before we start seeing revenue and gold out of the ground?
Yeah, so first gold pour is, well, first ore delivery to the mill is currently scheduled for early December, with first gold pour mid-December. We would anticipate reaching commercial production sometime in Q1 of next year.
Okay, excellent. And under Canadian law, at what point must AngloGold declare its intention towards holding in PureGold, given the recent exercise of warrants resulting in their 16% of holding 16% of the company?
Yeah, so anyone that holds more than 10% of a company is deemed insider and reports. And so within Canada, you can look at those public filings under SEDI, SEDI.ca, and you'll see any changes in the ownership of 10% shareholders. So that's their reporting obligation. There are certain there's certain things that come into play if they were to cross the 20% threshold, but certainly within that 10 to 20%, they have a reporting obligation.
Okay, thank you. Stu?
Yeah, thanks for the presentation, Darren. That video was awesome.
Yeah.
I haven't seen one that good, I don't think, in the mining space. Just on the fire, if you could touch on that, you know, I know that made big news down in Australia, you know, a neighbouring mine, but just if you could comment on the shutdown and how things are now.
Yeah, you know, it's an excellent point. We had a forest fire that broke out, I guess it would be Monday of last week. Unfortunately, they're far too common in Canada, like Australia, and with the bushfires. It's been very dry in the Red Lake area, and we had a bit of lightning cross, you know, in the days preceding to the ignition of that forest fire. Fortunately for us, it blew very quickly away from our project area. There was some danger to the main transmission line, and thus there was an evacuation of the Red Lake area based on that danger to the main access into the Red Lake. We're fortunate in that the winds calmed down. The firefighting crews were on it very quickly, and then we got very heavy rain on Friday of last week, which has effectively continued off and on to today. And so the fire is pretty much out. We're back to pretty much full operations on the ground, both underground and on surface. And so really the impact was limited to the 7 days of activities that we were effectively suspended.
Gotcha. Thanks for that. And then on the if you could tell us some more about the latest high-grade discovery in the production zone and the current strategies to discover more high-grade zones like that.
Yeah, I think there's the few things that could reference. We did put out results fairly recently from underground that included just under 47 grams per ton over 6 or 7 meters, and that was a drill hole that was targeting extension to one of the early long hole stopes that'll form part of our mine plan, and it actually sits in the hang wall of that long hole stope. And we've subsequently gone in and released several more holes that tie into that same structure. And so this is an opportunity that we saw in our test mining. I talked about how we reconciled extremely well with the two stopes that we plan to mine in test mining. We also discovered a hanging wall lens in that test mining program that ultimately led to us producing or extracting 55% more ounces out of the test mining area than we had originally planned. And so, that and the recent drilling within the footprint of future stopes, to me, suggests the potential to continue to grow in close proximity to our existing development as we build out our phase 1 mine. So that's certainly one aspect, and something that we will be drilling, pretty much in perpetuity now as we operate, looking for those types of extensions to mining shapes and additions to the overall mine plan. We also are drilling, again, actively in the surface discoveries, and in the same kind of aspect there, we're looking to grow resources, and results will be forthcoming, and will be, fairly regular through the balance of this year and into next year from that ongoing drilling activity.
Thank you, Artie.
What is your advance rate per day for the underground development, and how close are you to the planned stops right now? And is that going parallel with the mine development plan?
Yeah, so our initial feasibility study, we were targeting, or we planned out a 5-meter advance rate per day for a heading. We're actively achieving about 8 meters a day, so we're doing quite a bit better than the feasibility plan. And again, that has the benefit of, if we maintain that, obviously we'll have a lower cost structure because they're doing the same amount of work in less time. But it also means that we're opening up, the deposit faster, which gives us opportunities to now look at our mine plan, look at the sequence of mining, and trying to maximize the higher grade right up front when we turn on the mill. So that's going, it's going very well on that front.
Thank you. And has your closure plan has been approved or not?
Yeah, so we're, from a permitting perspective, we are a permitted mine with, existing permits in place, including a closure plan. We are amending those permits. We had the first amendment approved, about a month ago. We've got 2 more to go: the closure plan amendment and the mill effluent amendment. And so we are set to file the closure plan here in the coming days, and that pretty much completes that process. The mill effluent permit has gone through its initial regulatory review. We've seen conditions on that permit. It's gone into an expedited approval process, and again, be well in hand before we turn the mill on.
Thank you. Campbell?
Sure. Can you tell us a little bit more about Oxygen Capital and their relationship to PureGold, and their holding in PureGold, and board and management positions, decision making, and all that? How does that all fit together?
Yeah, so Oxygen Capital is founded by Mark O'Day, and really it kind of ties together a stable of companies which include PureGold, Discovery Metals, Sun Metals, and Liberty Gold. We have a relationship there in that we can share kind of share services across that stable of companies. So it gives us an opportunity, a broader skill set, if you will, at no additional cost to the company. I'm 100% devoted to PureGold mining, and all of my time is obviously devoted to that. But we benefit from that broader exposure and technical capacity and strategic thinking and so forth. It does not hold any shares in PureGold. Shares are held individually by the founders of Oxygen Capital.
Like a lot of groups, is there, say, shared costing? So if someone gets pulled off to do 5 hours of work, does that go somewhere?
It's a non-profit arrangement, and so if we use somebody for a certain shortened period of time, it's just charged out on their rate with no profit taken.
Got it. And someone asked, is that visible gold in the photos? So
yes, there was a
which
photo
one he's referring to, but
gold. Maybe Adrian, you could flip back to that. There was the one on the exploration program. And so we do see visible gold quite commonly in our deposit. That is a folded gold vein. In fact, that hole is from core, and it actually forms the anchor. It's the anchor point of our reserves. So that is the deepest hole that we've drilled into the reserves. Again, really highlights the open nature of the deposit with gold like that shown at about 1,300 meters depth. Gold is commonly visible at the PureGold mine, and in fact, when you look at the metallurgical recoveries, we anticipate 96%. It's a very simple ore body from a metallurgical perspective. But interestingly, we see anywhere from 50 to 90% gravity recoverable gold, which again speaks to the free gold nature of the deposit.
What is the average reserve drill spacing at Red Lake?
So, I mean, the PureGold mine, we're showing an average spacing of about 6.5 meters again, or 20 feet between drill holes. And I'm not sure if the question was referring to our own deposit or the Red Lake mine to the north.
I think he knows what he's talking about. He must have. He must be referring also to the general camp. So
yeah. I mean, the nature of these deposits is, they do have spectacular gold, like you see in the photo here. And so the closer space your drilling is, the better representation you get of the overall grade of the deposit, the geometry, the continuity, and the fact that we have 1.3 million meters of drilling is a huge benefit to our deposit. I mean, it gives you real certainty again around those parameters, certainty in the geological model, the resource estimate, and gives you a lot of a real de-risking aspect to the project.
Okay, thank you.
As you've made some comments on Anglo Gold, and they recently exercised some of their warrants or options, to maintain the 16%, but maybe some people are thinking there could be something more to that as well, or now you're getting the production stage, more, this is kind of a ripe time for larger companies to look at consolidation. If you had any comments on what you're seeing out there?
Yeah, I certainly can't comment on Anglo's intentions or rationale for exercising their warrants. They've been supportive, as I said, from day one. They helped finance the acquisition of the project. They've pretty much stepped up every step of the way to help us fund the exploration and development of the project, and they've recently exercised their warrants. One comment I will make is, obviously we're in a gold market right now. We've seen a real move in the metal price. We like the jurisdiction. We like the grade of our deposit, the size, the growth potential, each of these things that I've touched on, and that's that's going to be something that's going to be common across the industry. And so we are the only gold mine coming on stream in Canada right now. We're the only next gold mine in North America, and I think all of that lends itself well to our valuation moving forward.
Yeah, and on that, are you, as you're making that transition, are you seeing some larger funds taking interest in the story that like producers, and are you getting any more coverage from sell side? And if you could comment on who does cover you.
Yeah, there is there's definitely a transition that's quite typical as you move from exploration through into production. You do see a rotation of your shareholders into more of an institutional base, and we've certainly seen that and benefited from that. We are in kind of that sweet spot now, only months away from production, where institutions can start really taking a view on the company. You look at our trading pattern over the last 5-6 months, we're getting real liquidity. Market cap valuation has grown, and we are on track right now for GDXJ, which is something to watch out for as we come in towards the first gold pour. And so I think that's another aspect of the company as we move forward. And we've seen our coverage grow as well. So we had Stifel come in recently, Tyrant launch coverage, and just this week we had VT Capital launch coverage with a pretty healthy target price. So we're definitely seeing that interest as well.
Yeah, that's good. I actually did get the email from VT, I think. And that slide you had on the operating mine list is pretty impressive. I haven't seen many peers of yours, in the whole sector, I should say, have such a comprehensive list. So with that in mind, how are you finding, and the team, how they're finding this build versus their experience in other mines and other jurisdictions?
Yeah, that's something that I really like to see, is when you walk on a site, just get a sense of how the team is thinking about things, and whether they're smiling, whether they're happy. And I can tell you, I was on site last weekend, and there's a real palpable sense of energy and excitement about what we're doing right now in the community, and specifically at PureGold. And so the team has come together extremely well. We've added incredible depth in the milling side, which will be extremely valuable as we complete the construction or modernization of that plant, as we commission it and bring it into nameplate capacity. There's a bantering that's going on back and forth between the teams. So I think there is a real sense of energy and drive to reach our December 1st first ore to the mill, and overachieve as we come into commercial production.
That's good. Yeah, having that camaraderie and everyone on board attitude is helps these things along.
Absolutely.
Thanks, Artie.
What needs to be done in terms of rehabilitation of the shaft and in the processing plant before bringing the first ore as of today?
Yeah, so within the shaft, we have an Alimak right now that's installing our permanent pump stations for dewatering. It's down at about 350 meters depth, and so as they drive that Alimak down, installing those pump stations, they're doing a rehabilitation of the shaft at the same time. And so that work is ongoing. It's going very well. Everything's in great condition. Bear in mind, the shaft was operational back in 2013, so it's got a fairly recent operating history. So we don't expect any major issues in that rehab work. So that's going really well. Within the plant, I talked about some of the work that's happening there, but effectively we're going to have a new grinding circuit, a new gravity circuit, a new gold room. All the pipes are being replaced, and so we've gone through all the hard work of getting ready for doing the installs, and that work is now underway and well advanced. We're very much on track for our dry commissioning and kind of October timeframe, wet commissioning through November, and then first ore in December.
Thank you. What do you think the biggest risk is for having a delay, and how you deal with it?
I think the biggest risk is likely still COVID-19. We're in Red Lake, Ontario. It's a community that most of our staff work in and live in, and most of the contractors are drawn from Northwestern Ontario, which has had a very low incident rate. In fact, there's no cases right now in all of Northwestern Ontario. So that's allowed us to move forward fairly efficiently. When you look at procurement, we've ordered over 95% of our major equipment packages, so that's all locked in. It's en route. Things are arriving as we anticipate. In fact, our new ball mill just came through the Port of Vancouver here recently and is en route into site. That is the key long lead item. So, I think we're in really good shape here from that perspective. But if there were further delays because of COVID-19, that's something that obviously we're watching pretty closely.
Thank you, Campbell.
Sure. more questions that came in. Will you increase drill spacing ahead of mining each stope? How much confidence do you have in the model?
Yeah, I have a lot of confidence in the model. You know, again, when you look at the 1.3 million meters of drilling and the 6.5 meter spacing in the existing reserve today, that's I've never worked anywhere with that kind of density of drilling. So that really does give you a lot of confidence about, you know, again, the grade and continuity and geometry of the deposit. Having said that, we've got a healthy drilling budget that we will continue through the life of mine, and that'll include drilling that's there to target those additions like we saw in our test laying program, like we recently released, and also to better delineate zones in advance of mining.
How much tailings capacity do you have in years?
Well, we've definitely got the 12-year mine life that we see in the phase 1 mine is achieved through a 5-meter lift on 2 very small tailings dams. Beyond that, we could look at raising the polishing pond dams to give us significantly longer tailings capacity. When you look at our broad tailings management facility, it's very well situated with natural topography working in our favor, and there's certainly capacity far beyond what we see in phase 1 or even phase 2 of our operation.
Okay, thank you.
And with the high volume of drilling you're undertaking, how often do you expect to update the market on drill results?
Yeah, we have a policy really of releasing results as received, and so I would anticipate you're going to see results every 3 to 4 weeks from now through till pretty much the balance of next year as we drill out on our exploration program. So it'll be regular updating of the market in terms of those results.
Gotcha, thanks. And then what would you see as a critical path to get into phase 2, and how long do you expect? How long is anticipated to get there?
We're really looking or targeting year 3 of operation, and so critical path here is recall we already have resources in those areas. We've done early stage engineering work. We've thought about what it would look like from a mining perspective, how it would schedule out, and so we have the benefit of all that work that's already been done. Right now we're drilling aggressively to grow those resources, and those ultimately will be incorporated in a resource update. In operation, you can look to us to do further engineering work to talk about what the expansion might look like, all on track to that year 3 expansion.
Yep, gotcha. And then with gold being so strong, would you see any of the phases split up and seeing some of the additional ore defined just as increased milling capacity?
Yeah, so obviously gold price changes have they impact more than just the margin, particularly in a underground gold mining environment. I touched on cutoff grade, for instance, and certainly when we did our resources, they were established at a certain metal price. When we took that now and built out our mineral reserves, that was done at a certain metal price, and you make assumptions on that on the size of your openings, the size of your stopes, how they're going to be mined. It's all based on those shapes that are defined by metal price. So now if you think about gold, it's going from 1275 in our feasibility study to nearly 2,000 ounces today. Obviously that cutoff grade comes down. Lower grade material is economic. That means that you're getting bigger stopes, you're getting more stopes, you're getting a larger reserve. Maybe the mining method changes a bit because of the growth of those, and all of that leads towards increased tonnage available, which drives back to expansion. And so conceptually, you can think about changes in the resource and reserves based on metal price, which are added into the phase 2 mine plan that we're working to realize, and it gives you a lot of opportunities.
Thanks for that, Campbell. Do you have any more?
There's a little bit here. Yep. Share price is stalled recently despite the continued good news. Do you think the share price is now up to date with current events and therefore fully valued? Best you can answer that question.
That's always a tough one, and of course I don't think it's fully valued. I look at this as we got to look at what does 100,000 ounces a year mean in this context of this current market, and you can look at other examples, you know, be it Wesdome in Canada or other places around the world, and you look at similar production profiles, and they're $1.5 to $2 billion companies. So, you know, I look at us today. I think that you know, we're re-rating as we come into production. We are the next mine to come into production in North America. We're coming in at a time of record gold prices. So I think we'll continue to see that re-rate as we move to production. And so that's what you're buying today. But at the end of the day, you're getting all that upside for free. And so the surface discoveries, the Fork Zone, Wedge Zone, Russet South Zone, the ongoing exploration program, and that growth to depth is all something that's coming along for the ride that we'll see as the next value drivers.
Is there a royalty share program in place or planned for the future?
We are looking right now at really reinvesting into that growth. We have an incredible organic growth platform in front of us, and we'll drive value through growing those resources and bringing them on an expanded mine plan. You know, down the road we'll see where we go, but that's certainly the first priority.
Best you can answer. I know you sort of have you have a bit of a staggered production profile, but how many ounces of gold do you anticipate producing once you reach commercial production? So how do you?
Yeah, we're not there yet in terms of providing guidance. As we get closer to the date, we'll put out some guidance that will define those first months of production, and then, you know, probably more fulsome guidance will come out after Q1 or thereabouts next year as we have some operating experience behind us. You know, really the only thing I can point to right now is the feasibility study, but there's so much that's changed since the date that we put it really is just a snapshot in time.
Right. Very good. Reached the top of our hour. Thank you everyone for tuning in today to the PureGold webinar. We'll be queuing you for feedback. Please send us a few lines. Really appreciated. And as it's appreciated by Darren and his team. And follow PureGold on LinkedIn and Twitter, and go join the distribution list, what have you. And Amvest Capital's on the usual places there as well. So with that, I have a little closing statement, Darren. And
yeah,
you know,
thanks again for your time.
Yeah.
You know, really appreciate the opportunity to introduce or update on PureGold mining. You know, clearly we're really excited here. We're on the cusp of production with our phase 1 mine. We're bringing on stream the 17th highest grade mine in the world. But this is a mine that comes with all kinds of opportunity. We're actively drilling. We're looking to grow resources outside of that phase 1 footprint. We're looking to expand, and we've got the benefit of zones like the 8th zone that can be real company makers. So I think that we'll be continuing to update the market with exciting news through the coming months and years.
All right. Thank you. Good day, everyone.
Thank you.
Thanks.